See, when you track the trend line, new listings are basically going like this. It went from the index of about 140 down to 80. So that's about a 60-point swing, which is very significant and why new listings have come down quite a bit. But what you're seeing outside of seasonality in sales is that sales last year in May 25 are right here. Sales right now are right here. So that little jump from last year is what we're seeing. But the key thing is you see this gap over here, the blue and the orange one. The blue line is on the top, meaning that there's a lot more new listings than there are new sales. But now we're finally on the reverse where the sellers are on strike and they're not selling anymore because they can't get the price that they want. New listings just dropped 19%. The real estate board is calling it market tightening, with the home prices set to climb in 2027. But the part that they're hoping you just skip over is that their entire forecast only works if sellers keep refusing to list. So before you believe a word about 2027, let me show you what's actually propping this market up and why the comeback everyone's waiting for might be the very thing that keeps home prices down. The latest housing data from the Toronto Real Estate Regional Board just came out, and it's saying that, look, the market is tightening. And what tightening really means to most of the people who are analyzing the numbers is that the months of inventory is gone lower, meaning that the amount of available homes for you, the buyer, to buy is decreasing, which means that it's slowly becoming and leaning and pushing towards ever so slightly into a slightly strong seller's market. But I'm going to tell you this, it is kind of true. It is statistically true. And you can make numbers say whatever you want, but the real story is actually the number of new listings. Sellers who want to sell has decreased dramatically. That is the most important number in this set of data right now that Toronto Real Estate Board hasn't really talked about. So when we look at the historic new listings in the month of May, you can see that we are right here in 2026. We're just about the 10-year average. Let's say a little bit below it, which is good, and why Toronto Real Estate Board is saying that things are tightening. Because effectively what's happening is that the 19% move down from 2025 to 2026 moved it back within the realm of what it should be. However, the sales went up 6%. Which is a good thing. And a lot of people are touting, hey, it's gone up 3 months in a row. But again, part of that is seasonality. Part of that is, hey, we're just comparing ourselves to a historic 2025, that how bad it was. So the way that I would frame the number with the anecdotal stories that I am seeing right now is, hey, a lot less sellers have opted to sell, but the number of buyers is more or less the same. Maybe they increased a tiny little bit, but it's not enough to move the needle or have prices go up. Now, if you're following the housing market every month, make sure to subscribe and hit the bell icon, because next month's number is going to tell us even more about whether the seller's strike is holding or starting to break. So you don't want to miss that. Now, these are the latest numbers from TRREB, and you can see why I labeled it demand is back, but not high enough. Because going from 2025 to 2026, you have an increase of 6%, or effectively a few hundred sales. But your biggest number is that new listings are down 19%. That is the big one, which translates into the number of available properties to buy, which is the active listing number, to 26,000, call it 27,000, which is down from 30,000. And all of this means great, but the story and the narrative that is being peddled right now is not correct from what I can tell. What I am seeing is that, yes, the market is tightening, but in order to tighten, the sellers are meeting the buyers where they're willing to buy. And this is exactly why you're continuing seeing prices go down on a year-over-year basis. So last year it was at 1.1 million, we're at 1,070,000. And that is the important part. Just because sales have gone up, it doesn't mean that prices go up. Everyone still conflates the two, and a lot of headlines don't even say that, whether they're talking about sales up or prices up, and they want the readers and the audience to assume it's prices up. That is not true. Sales are up because sellers are willing now to sell it for what the buyers are willing to pay for. And this is why it's very important to look at the historic sales. 6% jump is like right here going boop. When you zoom out in the grand scheme of things, cool story, bro. It's not that much, because you need sales to at least go back to the 10-year average right here, which is around 8,200 in the month of May. We're at 6,500. So by my math, we're still short about 1,700 transactions, which is like a 30% jump. Just remember that. We're up 6%, but to get us back to the 10-year norm or the regular average, we need to jump 33%, or in total, like 40%. That's a lot of sales. And I just don't think we have that demand right now because of sentiment. And this is why understanding this chart is very important to distinguish between what market tightening actually means. So let me explain this chart to you because it's going to show you what I mean by sellers are on strike. So you have this orange line over here, which basically is the number of sales starting from January 25. So effectively like 18 months ago. Then you have this blue line over here, which is effectively new listings starting in the same period. Now, the very important one is the index that we're using is 100. So this is what it was in the previous year. So you can see at this point in January 25, we had less sales than the previous year, so in 24. And then slowly sales increased over here. But it's not like it increased that much more because remember, the previous year was really, really bad. But what we saw was actually the number of new listings went down in this way. And you can see when you track the trend line, new listings are basically going like this. It went from the index of about 140 down to 80. So that's about a 60-point swing, which is very significant and why new listings have come down quite a bit. But what you're seeing outside of seasonality in sales is that sales last year in May 25 are right here. Sales right now are right here. So that little jump from last year is what we're seeing. But the key thing is you see this gap over here, the blue and the orange one. The blue line is on the top, meaning that there's a lot more new listings than there are new sales. But now we're finally on the reverse where the sellers are on strike and they're not selling anymore because they can't get the price that they want. So they're choosing to rent or they're holding out. And that's when you're seeing that the gap here is widening, which is why I foresee the market to tighten even further. But it's not because there's more buyers, but it's because there's less sellers. So even if sales stay consistent or go up a tiny little bit right now, what's moving the market right now is less and less new listings. That is the importance of what market tightening is right now. And like I was saying earlier, a lot of new sellers are just testing the market. They don't have to sell and they won't budge. But the ones who need to sell are the ones setting a new lower floor. And finding them takes time and someone who knows where to look. So if you're buying in the Greater Toronto area right now, book a call with me using the link that's on the screen. It's www.chatwithzen.com and we'll run through your personal situation together, no strings attached. Which brings me to our board's prediction that if sales strengthen further relative to listings, I think that's a very key thing, we may start seeing prices start to grow in 2027. And my biggest caveat in all of this, and I've seen this before and why I want to bring it up is, this is the same narrative we saw in 2024, where after we had a dead cat bounce in 2023 when prices went up, and all the sellers like, well, this fall sucks. I'm gonna wait till spring because everyone thinks that, once the spring market comes around, everyone lists. And once spring comes around, they're gonna get their price. But what happened is all the sellers came out, and that's what caused us to have 6+ months of inventory in 2024, and we're just slowly starting to grind it down right now. So what if all these pent-up sellers, because the buyers are all more or less the same thing, we're up like 5-6%, but this 20% of sellers who aren't selling right now, they all come back to the market at the same time because they were planning to sell, and any good sentiment will cause them to come and test the market again. What if we flood the market with sellers again? Because they're not going anywhere, they're planning to sell, they're just waiting for the right time. And that's kind of why I'm a little bit concerned that, hey, prices are going to be up in 2027. Yeah, there's a chance, but no one's looking at the flip side of what if all the sellers come back? And this is why it's very important to look at how many sales we had in the season so far. And you can see this is a chart indicating the number of sales we've had starting in January all the way to May. And you can see that this year we had 24,405. Not very high. Last year we had 24,470. So this year was worse than last year. And I have 2 years I would call out. During the pandemic years, remember, pandemic was March, April, May, we had 27,230. So we had more sales in the pandemic than we do right now. And for us to get down to a number lower than this, we have to go all the way back to 1996, which we had 22,000. So we really need the buyers to come back to absorb this potential inventory that we lost in 20%. And I've always been saying this one thing. If the investors aren't coming back, which make up 30, 40, 50, 60% of the buyers, if they're not back, the rest of the buyers are just end users. They're not going to need to buy more homes. So until we get the investor demand coming back, I think it's going to be very hard to get up to 40,000 sales like we need over here just to get back to absorbing the 20% of sellers who may plan to sell when the market feels a little bit better, when it's a little bit tightened. And this is why it's very important to look at the active listings, which is effectively just how many properties are available to buy right now. So even though the market is tightening right now, like I was saying, we still have 26,000 homes to buy in the Toronto regional market right now, down from 31,000, but our average is right here at 22. So we still need 4,000 sales to go away. And like I was saying, for sales to come up 40% just to get back to the norm, that's where the numbers don't make sense for me. Our available inventory is still 25% higher than what it should be. The number of sales we should have is 40% lower than what we should be on the historic average. So for us to get back to like a normal Toronto, like quasi sellers market, we need both sides to budge. And I just don't know if that's gonna happen in the next year right now. Which is why when we look at months of inventory, yes, we are down from like 5 from last year, which is a significant improvement, but we're still at 4. And you can see in the month of May, we generally average 2. So we need the months of inventory to get reduced in half, which is exactly why having sales go up 40% and then available property and active listings come down, call it like 40, 50%, will get us there. But what I am watching for is, will the sentiment be strong enough to move the needle back to 2 months of inventory? And at the moment right now, I don't think so. And as you can see, because sellers are taking their properties off the market right now, it's applying pressure to the available good properties available, which is exactly why, even though prices are down 20, 25% from the peak of the market, it still feels like things aren't affordable because those who own the homes that don't need to sell won't sell. And if you want to understand more of this dynamic when prices have come down 20 to 25% and it still feels unaffordable, make sure to click on the video that's on the screen. I'll see you in that next video. Until next time, your move, your future. See ya!